It's a momentous day in global economics. The US, long the top dog in the economic league table in the world, is about to lose its spot as top dog. China is going to overtake the US on the basis of new figures published today by the world's leading statistical agencies. Now, how can we say this, and how has this happened much earlier than we thought? We thought this would happen sometime towards the end of this decade, 2019, 2020. But a thing called the International Comparison Programme, which is hosted by the World Bank and made up of all the leading statistical agencies in the world, have clubbed together to try and work out the relative size of different economies. And they've said that in 2011, China was 87% of the size of the US. Now, if you look at this chart, 2011 is about there, 87%. And then if we just apply the growth rates of the two economies, the US and China, since then, we see China overtakes the US this year. Now let's look at these figures in a little bit more detail. On this chart, we see the US at 100, so that means that is the world's largest economy. It's always at 100. And we see what share of the US other countries are. And we're comparing the last time this ICP, this International Comparisons Programme, performed such a calculation. We see China shooting up. And the corresponding losers in the world economy are the rich countries of the world. But we see the poorer countries, Mexico, Indonesia, Brazil, and India, all rising up the global league table. So what's driving these changes? Well, it's all about cost. It's all about what money can buy in different countries. It's not about exchange rates moving or whether exchange rates are over or undervalued. What they've done is they've tried to work out what one renminbi or 1 euro buys in the countries that they apply. So to work out the volume of goods and services that are actually produced in these countries. So it's much cheaper to get a haircut, let's say, in Beijing than it is in New York for the same quality haircut. And that means that 1 renminbi will buy more in China than $1 buys in the US. And so what the revisions have essentially done in this new work is to say that actually poorer countries were cheaper than we thought they were, and richer countries are more expensive than we thought we were. So the volume of goods and services produced in poorer countries is actually significantly higher. So these economies are actually, in the amount of stuff they produce, bigger than we thought. But there's one important way in which the sheer size of an economy isn't reflective of what's going on the ground. And that is that China is by far the largest economy in the world by population. So this amount of the size of its economy, its GDP, has to be divided by many, many more people. It is not, in any respect, the most wealthy country in terms of living standards. In fact, it might be number 1 in the world in terms of size, but about number 99 in the world in terms of living standards. So China might be big, but it's not rich. And I think that's the main conclusion we should draw from today's data. Chris Giles, Financial Times, London.